Welcome to Your Money with Leo Daprile. I'm Leo Daprile, and each week on AM 570, Dan Rivers and I will talk about anything and everything to do with your money. If you ever have questions, please feel free to call me at 330-533-6936, or you can email me at leo@gemyoung.com. Enjoy the show.
This episode of Your Money with Leo Daprile is sponsored by Grange Insurance.
Right now we're going to talk about your money, and this may be of interest to you if you have student debt. Our guest is Leo Daprile from Gem Young Wealth Advisors, and he has a little program here called Your Money every Tuesday morning. How you doing?
Good morning, Dan. Doing great today, thanks.
I'm well, and summer going well for you?
It is.
You had a week off, didn't you?
I did. If you sent me an email, and my automatic reply, since we're talking about Outlook, says, I've decided to run away.
Yeah. There you go. Well, Leo and I were just talking, and maybe you want to do this too, because I spent July 5th. We had that was a day that, the fireworks were July 4th. Mm-hmm. The picnic was July 4th. And July 5th, most of the people just took that as a leisure day. Maybe sit in the house, watch television, read a book or something. I did. I spent that day as putting in a new email address for my personal accounts and stuff like this. Because we were sharing one, so I did that. And when you take on a project like that, not every website is easy to find where you can change your email. You go to First Energy and they're different. You go to Dominion East Ohio and they're different. And it's really quite daunting to do that kind of a thing, to change an email address. But we have to do it, don't we?
And I applaud you, because that's an awful lot of work. Because to your point, not only you probably didn't realize how many places you were connected to you started changing, right?
Yeah, I mean, it's the television companies, it's the sewer, it's the water, it's banking, it's on and on and on and on.
Every retail place you've gone to that you have an account.
Yeah.
I mean, you probably had hundreds and didn't think about it.
Yeah. Oh, I got a funny story. I was changing grip on my putter on Saturday. And I had a chance to play in the Circle of Friends golf tournament yesterday, which I've done for years. So I went over to Dick's Sporting Goods, and I go back and I find, a grip that I needed. And this will work. And it was really nice. It's one of those big flat, under fatso grips, and I go up there, and it rejected my gift card. And the lady says, I said, what's the matter? She said, well, we don't take these. She says, you can't use golf headquarters here at Dick's. I think they're the same color.
So did you go down to golf headquarters and buy it?
Yeah. And I slinked out. I slinked out of the store.
That is a funny story.
Oh, yeah. Gift cards, they pile up, don't they? I mean, if you've got family and friends and you've got a few gift cards out there, it's kind of nice to go through them and say, hey, I can go, I get something free today.
That's right. And the thing is, it's like if you're getting the Visa gift cards, it's a great gig for the card companies, because the $5 fee, $4.95, what they charge you to activate the card, that's a nice 5% cost just to give people money.
Yeah. And then that money typically sits in their account, right, until you use it, and then they'd be able to use it until you need it.
That's right. That's exactly right. It could sit there for months, hundreds of millions of dollars.
It reminds me of why didn't I think of bottled water back in the 60s?
Yeah. But whoever thought people would pay for a free natural resource like they are?
Right? Oh, yeah, it's crazy. Well, I'm golfing yesterday, and of course, we were at the Circle of Friends golf tournament. It's a very nice course, the Lake Club, and they have the cart coming around, and they serve soft drinks and water and sandwiches and things like this. And I said, do you have a water? And no. They said, we're out of water. And then I looked over at the stop along the way. Here's free water right over here in a styrofoam cup. But here I am. I'm thinking, if I want water, I've got to buy it out of a bottle. That's a silly mentality that we've got, isn't it?
That's how much we've been conditioned.
Yeah.
Right.
And I'll find myself even at the home when I'm out there working in the garage or something like that. I'll go to the refrigerator and I'll get a bottle of water when the tap water is perfectly fine inside.
That's exactly right.
Yeah.
But I'm from the generation that we drank out of hoses.
Yep. Yeah, you got it. Had that funny taste to it, though, didn't it?
Tasted the rubber on the hose. Sure did.
Yeah. Now, where'd you go to school?
I went to St. Christine's.
St. Christine's, and then to Youngstown State?
Then I went to Ursuline. And then Youngstown State.
Okay. And Youngstown State, I'll bet back. Did you do student loans and this type of stuff, or did you work your way through?
I worked my way through. I I was a paper boy for a lot of years, and my parents had these money disciplines ever since I was a kid. So I saved quite a bit before I went to college, and college didn't cost naturally what it does then.
Right.
And quite frankly, if you want the story, my dad walked into my room. I think it was May. I was getting ready to graduate high school, and I'd already planned to go to college. Didn't seem to know, and he came in and he goes, "Okay, here's the deal." He goes, "If you don't go to college, your rent's $400 a month." And I'm like, "Dad," he's like, "Let me finish." And he said, "Then you owe your mother another $100 to wash your clothes." Mm-hmm. And I'm like, "Dad," he goes, "Let me finish." He goes, "If you decide to go to college, you could live at home for free." He said, "You got to pay the insurance." And I had an old rusted out pickup truck that was his. He said, "You can continue to drive that, but you have to pay for your school." And I'm like, "Dad," he goes, "Let me finish." And then he looks at me and he goes, "Let me know what you want to do." And he walked out of the room.
No rebuttal from you, nothing. He laid those two things down.
But I was already enrolled in college. That's what I was trying to tell him.
Yeah. Oh. Yeah. Well, since we're talking about this, I don't know that I ever. By the way, we take calls in this segment about money. If there's anything you want to talk about money, call Leo and we'll put him on. He is with Gem Young Wealth Advisors. When I got back from the military, I had the GI Bill to go to college, and I had not been to college and probably never thought about going to college. I wasn't on that track. I was going to be, a mechanic or a carpenter or something like that, and I did that for a long time. But when I got back from the service, I found that the GI Bill was actually plus money because Youngstown State was so cheap.
No kidding.
So in other words, the GI Bill, they would send you more money than it would cost to go to Youngstown State. So I got to the point where I could hardly afford not to go to college.
That's right.
You had to go. And I don't know if that I ever would have gone if I'd had to borrow the money. So, people talk about, well, you gave up a couple years of your life for the service, but I don't know. They gave me a lot more. They really did.
Well, but you took a bigger risk.
Yeah, you just took a risk. Yeah,
and it's not about time; it's about the risk to me that you took.
Yeah, but boy, I tell you what. I mean, the government has been very good. And I think people shouldn't lose sight of how good our government is. But now we're in that position now where people have had all these loans, and it's now just a question. If you're going to be on a track where you're potentially going to make some money, they'll loan you almost any amount. But the problem is that they'll loan you almost any amount for maybe a dead-end job, right?
Well, this goes back to having to make good decisions to begin with. Mm-hmm. One of the things we've talked about in the past is in colleges are masters at selling you on the college experience instead of the return on the investment. Mm-hmm. And I've always been a return on the investment guy. And I did that with my kids when they were choosing schools. And I would say to them, I don't care about your college experience. That's for you to figure out. I'm looking at you becoming a productive, contributing member of society. So I'm not going to go out and spend $100,000 for you to go to a school to be a teacher. Not that there's anything wrong with it, but you can get a teaching certificate for $40,000.
Yes.
Right. So you shouldn't be spending $100,000 for that. So that's where some people have this disconnect on what they're going to school for. Dan, I was from the days too that I went to school full time and I had to work full time. Mm-hmm. That was the other part of the equation. That's just what it was. I joke with my kids that sometimes I have more time to goof off now than I did when I was in college.
Exactly. And something else too, when you're busy in college, I took 20 hours the last quarter and I was working full time. And I obviously didn't do all that well when you take 20 hours and you're working full time. But you somehow get it done, don't you? You somehow make that all work. When a busy you want something done, they say ask a busy person.
That's exactly right. And this is probably a 10-year-old study, and forgive me, I don't remember who wrote it, but it said that 20 years out from being in college, you're making the same money no matter what college you went to, because if you're good, where you went to school seems to erode over time, mm-hmm. and people rise based on their skill sets to get there. So I think when parents are looking at schools and they're looking at the cost of debt and they're looking at what this does to a person over time, you really have to think hard of they should be asking the question, what's the return on the investment if I go to this school and get this specific degree?
So, just to feed that back to you, if you excel at Youngstown State and you sell at NYU, over time, you're going to be kind of even.
That's exactly right.
Right?
That's exactly right.
Because you've comprehended the information, And now your life experience makes you, a more valuable employee as you go along, and you learn all along. I mean, good Lord. I mean, think about how much I've learned over the years here just doing this job, just by osmosis. And you too, right?
That's exactly right.
You figure it out. You have to read and figure it out. But, let's talk about the loan and the debts and stuff like that, because now kids, including my grandchildren, they basically get as much money as they need to go to college, but they will have to pay that money back.
I think there needs to be more of a balance. Instead of just taking the full amount of the loan and kids going to school full time, I think kids today need to be working part time going to school if they're having to borrow money, so that when they come out, they have more control over on what the debt is. It's okay to be busy 60 hours a week. Mm-hmm. If you're a high achieving person in today's world, that's what you're working anyhow. And if you're looking at going to school as an investment instead of just an experience, then when you get out, the average payback of a student loan is 10 to 12 years. I don't have a problem with that, because if that's going to put you in a higher earning capacity for a 45-year work span, then that was an appropriate investment for you to make. But if it's taking you longer than that, you've borrowed too much money for the degree you sought, or went to a school you shouldn't have gone to.
So how do we make the decision on teachers? Because we need teachers, but the below pay to start is notoriously low.
Well, that's why schools like Youngstown State are a great venue for getting that education. And people, my son's a journalist, and it's kind of like the teaching profession, right? He's in it for the love of the profession, not for the money. And that's the track he chose to go down. And I think people that want to teach are going to go down that track. But it's just like, if you're going to go down that track, make sure you're going to the right place to get that
exactly
degree.
I mean, long term, it has a good payoff, because you'll be making probably in your lifetime $70,000 to $100,000, for teaching. And you'll have your summers off, and it's a good thing. But you're going to start at maybe $35,000, and you're going to start there. And if you have a huge loan, and I mean, I'm talking huge to me is $100,000, and you can go to most of these, even state schools, and come out with $100,000 in cost, can't you?
Well, the average debt is $29,000.
Okay.
To keep that in perspective. If you look at the numbers that all the student debt, and this is, if you want an argument against forgiveness of all debt, 42% of all the student loan debt is for people with a graduate degree or above.
So they've got the skills.
And the earning capacity. And what, Bernie Sanders, Elizabeth Warren, I know she had a plan, and others are trying to forgive all debt? All debt.
All debt. Now that's not fair, is it? That is not fair at all.
I don't think so.
I mean, if you've got a master's or a doctorate, and you're in an industry where you potentially could earn that kind of money to pay that back easily, that is unfair. What is fair, in your opinion?
I think there's some people that probably tried college and it didn't work out for them.
Right.
And I think those people have accumulated a certain amount of debt. And I think the average debt for folks that are in community colleges is around $7,000. Mm-hmm. And those are the folks trying to figure out whether college is for them or not.
Yeah.
And maybe it isn't, and maybe they just couldn't make it that next step. I think there's people we should always look to help. But I don't think we should categorically be getting rid of student loan debt. Because there's plenty of people that are paying their debt on time. There's plenty of people working in the profession that they chose, and the income that goes along with the profession they chose.
So you're saying that we would do this a la carte and on a first come, first, I mean, not first come, but an individual basis.
Yes.
And we sit down and, for example, someone that may have decided that they were going to drive a truck or something, and they went to truck driving school, and they've got a debt of $10,000 now, and they're not doing that anymore. We might call that, an error, right?
Or somebody that tried like a community college and just couldn't cut it, and ended up with $7,000 or $10,000 in debt, but is still working, productive member of society, but just doesn't have the means to pay that off. I think we should talk about helping those people.
Yeah. But you're talking about the upper echelon people out there that have been well educated and that have the potential to go and earn. They should continue to pay their debt.
Especially with the changes they made to the student loan programs that let you vary your payment based on the economic shocks going on. So if you've gotten a job that's paying you less, you're able to bring your payment down.
Yeah.
So for those in the middle, there's some safety valves in the loan program. Is it a perfect program? I certainly don't think so. I think it could be, there's more things to tweak, but throwing everything out and blaming the government for it's America. These are your individual decisions. Think about what you're talking about before I came in on the manufactured homes.
Yeah.
The encroachment on the individual decision.
Yeah.
Right?
Yeah, exactly.
We got to be very careful about giving that right up.
Yeah, exactly. That's why we have zoning, and people are going to talk about that. Let me ask you, what's the economy doing right now? Is it, it seems that one day we gain 400 points, and the next day we lose 400 points.
Well, the inflation numbers came out today. It's 5.4%, so the numbers are hot. But then again, all you have to do is walk around, and you can see that everything costs more money.
Yeah.
So that number is just an affirmation of what we already know, right? Mm-hmm. So, and they're saying the largest accelerant to the inflation for last month was used car prices. Mm-hmm. But groceries is paying into that. But it's crazy how much used car prices are going up. But I think that's a temporary bubble.
Yeah, and I talked to the people about lumber yesterday. I actually ran into two people that actually sold lumber for a living.
Okay.
And they basically were telling me that what happened is that people stayed home and they started demanding all this lumber, and at the same time, their capacity to produce was cut way back, and now they're running full out, and they still can't catch up. But they're starting to make some inroads now.
Okay, and then once that happens,
yeah,
you'll see prices drop quickly.
Before we'll be back down to a reasonable price. They'll probably bring it down to $5, and we'll love it. This listener says if the financial package works for the family, a more selective college and their alumni abroad can open many doors for students and opportunities. It all depends on the family and the students involved.
I agree.
Yeah. I mean, if you get the financial package out there, you need.
I agree.
A little bit about what you do.
Sure. We are, our wealth management group works with a select group of individuals and successful business owners that aspire for the work optional lifestyle.
And I'm one of them.
Yep. Yes, you are. And, as you know, we've developed processes that we've refined over time to help people get there. It's a very dynamic process for us. It's money, and the aspect of managing money is such a small component of what we do. It's really about the holistic financial planning, really getting to know and understand people. You saw it in my letter.
Yep.
You saw the walk that I walked, and we talk in my company about having candid, vulnerable conversations. And a lot of people don't do that. They stay around the periphery. But you really, if you're really going to help somebody, you really got to get deep with those people, and I have to get deep with them, so that we really understand each other and we understand the art of this business, not just the process or the logical part of this business.
Yeah. So I wish I would have met you a long time ago. The processes that you have, I mean, it's fantastic. The way he sits down with people and gets to know them, and it's not easy. And this guy is a guy that went through a lot, losing his wife here at a very young age, and still having to do the work. That takes a lot of guts to do that. And you came in and did your job every week.
That's right.
Yeah.
People still rely on me, Dan.
Yeah. All right. If you want to talk to Leo, he's a good man, Leo Daprile, and you'll find him at Gem Young Wealth Advisors. They've reorganized their company a little bit, giving other people more responsibility. His two sons work in his organization. You've promoted people within, and you're growing.
We are. We're growing. We'll probably, what we were hoping to accomplish this year, we've accomplished in the first 6 months. So we're busy. All
right. Write to him at leo@gemyoung.com, leo@gemyoung.com, or just search Gem Young Wealth Advisors, and you'll find them in Canfield. Get the number real quick in case people want it.
It's 330-533-6936 or leo@gemyoung.com.
Thanks for watching the video. Be sure to like, subscribe, and hit that little bell for notifications. And also make sure to connect with us on Twitter, Facebook, and LinkedIn. For all of your business news, visit businessjournaldaily.com. For all of your arts and entertainment news, go to afterhoursyoungstown.com.